So Leon, there we go. I can confirm that you can see your screen, and it is now, what does your watch say there, Leon?
Yeah, I've got 8:30.
You got 8:30. Right, I'm going to hand over to you and mute my microphone. Thanks, Leon.
Great.
Cheers.
Thanks very much, Shane. Okay, good morning again, folks. For anybody who has just tuned in or who hasn't heard me say good morning yet, great to have you again on this morning in week 7 of 8. We've got a couple of, I don't want to say smaller topics, but a couple of bits and pieces to go through this morning, still sitting in the audit execution phase, just so that we can be ready to go and get to the audit finalization next week, and that will then be our last week of the training course. So we're going to have a look this morning at just the journal cycle, a few bits and pieces about that. I just want to show you one or two things on the index of each audit section that you'll get. I want to have a look at the overall completeness working paper that we have, and I had mentioned that before. And then I also just want to have a quick look at sampling and determining sample sizes, and so within RAC as well. So a few bits and pieces. I hope I get them all done in time. Usually when I start getting into these things, there's a lot of interesting stuff to cover. So, but hopefully we'll have a bit of time for questions and answers afterwards as well. So I'm going to just start with the Journal Cycle Audit Program. Now that's document 20.20. Firstly, just be aware that there is a specific audit program for journal entries. It looks identical to the other audit programs within RAC, except that it's not populated when you populate the other audit programs. It is already in the file. We default to having it in the file. It's also broken up into the exact same sections, so if you do want to do control testing on journal entries, you are welcome to do that based on what you can then adjust in your audit plan, but generally you're probably going to want to follow a substantive approach. And in fact there are just 2 procedures outlined. One is for completeness and one is for the rest of the assertions. Once again, completeness and existence, very difficult to go about auditing those 2 assertions together, so there is a separate procedure for both. I just want to point out the nature of the procedure that we have for the completeness. It's talking about determining the completeness and accuracy of the population of journal entries. And depending on the accounting system that your client is using, this procedure may or may not be applicable for you. It's talking about taking your entire general ledger and eliminating all the journal transactions from the general ledger and then reconciling the general ledger back to the trial balance, making sure that you take general ledger excluding journals plus all the journals is equal to your final trial balance again. So it sounds like a bit of a circular procedure, and specifically for something like pastel, where if you do go and eliminate all the journals from the GL, you are going to be left with a reconciling trial balance. The point here though with this procedure is we need to go and consider the source. So if your client has a formal journal control system whereby they first got to get a journal voucher, and it's got to be authorized, and there must be supporting documents, and then it may be recorded into the accounting system. It may be more appropriate to go and make a sample of journal vouchers, randomly select journal voucher numbers for instance, and trace those through to ensure that they are recorded in the general ledger, so that they have actually gone and recorded all journals that should have been recorded. But that is the point of the completeness. We're wanting to make sure that all journal entries that should have been recorded have been recorded. Where, as I say, you're sitting with a pastel system where there are no controls over journal entries, and what is posted is basically what sits in pastel, it's going to be very difficult to do a specific procedure for completeness, and then I would just go about documenting how you consider completeness, or maybe it's with discussions or something like that. But it can get quite difficult to address that completeness issue depending on the system that you have. The next item, the next procedure is all about drawing a sample of material and other journal adjustments that has not been tested elsewhere, and then going and doing a number of procedures. Now, if you recall, on each audit program, we did point out that we wanted you to go and have a look. If you did test journals during your testing of any other section, we wanted you to carry it over to your journal testing, and that sits on document 20.30, which is our substantive tests of detail for journals. Okay, so here we have 12.30. Okay, what we now stipulate here is, obviously, it is the journal component, and we are just confirming that it's significant risk because we are dealing with a significant risk area. And the first question is asking you, how many journals are there in the population? Okay, and it comes down to, we need to eventually draw a sample size. If you only have 3 journals in the system, then obviously we can't draw a sample of 50. So that's just the point of requesting the number of journals. So it can be an estimate. If it's more than 120, 150 journals, it's not going to affect the sample size. So just estimate the journals if it's too difficult for you to go and specifically count up the number of journals that are recorded. So I'm going to go and put in 500. It's an estimate. We then list all the components within the audit. So every component that you said you were going to test, we list them here, and we're asking you to go and document how many journal entries did you test under revenue. How many did you test under cost of sales? So that's just for those transactions or those tests where you found journals and you've done those additional procedures as required. So if you did 2 in revenue and maybe 3 under inventory, that then starts reducing your sample size. So it tells me that there are 5 journals already tested in total. There's still 495 odd that you need to sample from. We then go and calculate the sample size. We use 40% of the population as the sample size, and that's why I say if you go, if you get much higher, because we limit it to 50, we're limited to a sample size of 50. If your journals, if there are thousands of journals, you're still going to have 50. So once it gets very high, just do an estimate. So you'll see it does come up with a sample size of 200, but you can use then that suggested maximum sample size. If you want to increase it slightly, you're welcome to do so. It is an internal decision. Let's go and select 50 items. Now it does go and stratify your journals into 3 types within your sampling. So it specifies we're looking for year-end journals, after year-end journals, and then routine and non-routine journals. Now the 5 that we've already tested, it has stipulated we've tested them over here already. Just want to get my spotlight filter on. There we go. So we've selected those 5 already, okay? And it's calculating the number that remain as 45. Because I haven't inserted a number of journals that I've tested for year-end and after year-end, it's telling me that there are 45 left to go. Now we specify here that we suggest a maximum of 12 year-end journals and 12 after year-end journals. So those are journals just afterwards. Go and make sure that they're not trying to do reversals and things just after year-end for some fishy journals that they may have posted before year-end. That's the point of testing after year-end journals. And you would just then go and stipulate. If you can find 12, I recommend getting 12 of each of those. They are a little bit easier to find because you can look just in February and March to find those items. But if you don't have 12, maybe there are only 3, then obviously you can only select 3 of those items. But as soon as I start saying that I am selecting these journals, it's then reducing the last amount required for my sample C in terms of the number of journals required. All right. The procedure detail, you can then just go and specify what procedures you're doing per assertion, and that you would copy from your audit program. Obviously, if you don't do our specific procedure, if you're doing your own procedure, you would put those details in, or otherwise just put the details from the audit program in, and you can then go and start to do the sample test itself. And it'll go and make space for you for your year-end journals. There's space for 12. What's the date, the transaction number? Describe the rationale behind the journal. What's the amount in the GLs? Okay. Are there RAND errors? And I'll go through this in more detail when we do the substantive sampling. What you can then do at a later stage is extrapolate any errors as well. Okay. We then do after year-end journals. Okay, and then our last is the routine and non-routine journals that we need to do from action 6. Okay, once I have documented a few procedures, sorry, I just want to throw a few things in here. You'll see what it does is it goes and specifies the procedure for you in each column, and you can just use the drop-down list next to each to go and tick off each procedure, or where necessary, go and put a little note number in. So you can just use that drop down. We've got up to number 20 in the drop down for note options. And then at the bottom of the working paper, we have a legend where you then can go and pull in that note number again. You can use your own characters if you wish, but put in the legend and then describe the detail of what that legend item then means. Okay, so that is how the journals will be tested, and this is where you would then go and do the sampling for your journal testing once you get to those journals. All right, I'm going to move now on to my fixed assets and investment property cycle index, and this is the same that is going to happen in every single one of the indexes within your file. Now, again, it has a little bit of a guidance sheet, because what we do pull into your index is also your system notes. We're creating a nice little container for you to go and document the system descriptions of the cycle in each case. So there's an index which you can use, feel free to use it if you wish. And you'll see that there's space to go and say whether or not PPE lead schedule is applicable, and then you can go and insert hyperlinks, so it becomes a little front page index for you for each section of the audit. Audit program is automatically going to say yes, and then you can go and add any items that you wish, specify that they're part of the audit. Once you say yes, then that row will print if you want to print your audit program, sorry, your index, and then you'll have the hyperlinks to follow through. But the index is completely voluntary. You don't have to use the index. We then include the system notes. And this used to be document 12.55, and there was one document for you to document all your system notes for all your cycles while you're busy with the planning. We just felt though that that was not the best location for it, because when you're doing the planning, you're not necessarily at the client and you can't ask questions about the system. Okay, the first thing that you need to do, and it's under action 1, is please go and document the laws and regulations and the policies and procedures that are applicable to the cycle. So just go and document the information, and then you would go and specify different types of transactions. So if we were doing revenue, you might have different classes of revenue that are recognized in different ways. So maybe credit sales and cash sales. For property, plant and equipment, what am I going to have? Fixed asset register maintenance. And then you can go and describe what is the process flow. So how does it originate? How does the transaction originate? How does maintenance happen? Details of discussions and with whom and what you inspected. So don't just go and write it, go and have a look what is happening. Frequency, how frequency does this control happen? How frequently does the procedure happen? who's the responsible person, what IT system is used. Just note if there are any risks you're identifying. Now we're actually past the risk identification phase, so we're just saying here, confirm that you have dealt with this risk on your business or fraud RAC, because if you find a risk here, you may have to go back and reconsider your risks based on what you're describing in your system descriptions, and where necessary you can go and give reference to the MLP. If I scroll down, you'll see that there are multiple items there, up to 10 different sections that you can include. All right, and that's then for different types of transactions. You'll have depreciation, additions, disposals. When you're dealing with smaller cycles, and especially if you are doing a smaller micro audit where you have income statement and balance sheet, you might just stipulate revenue recognition, how you recognize expenses, and that's it. That's the entire description of the cycles within that client. So depending on the level of detail, depending on the size of the client, you may need to just adjust how much detail you put in here. The other thing that I want to point out is you will note that the cells are blue. Therefore, information that you capture on this index will roll forward to next year. So it is again worth documenting these in detail. However, if you already have your system description in a Word document, nothing stops you from just putting a hyperlink from this working paper to that specific document, and that's it. You don't need to go and complete the detail here, and when you roll forward, you can just carry forward that working paper that has the system descriptions on already. If you do have those systems descriptions, it might be nice to include them under the planning section rather than under the execution, but we just felt if you don't have the system descriptions already, this is a nice place to go and insert it. Nice and easy to find, and it's then part of the cycle that you're delegating or giving a specific clerk to do. So I just wanted to quickly point out the system notes working paper section on each index. Okay. All right. I just see there is a question quickly that popped up that I want to cover, and it's how you record a hyperlink in the spreadsheet. If you are, for instance, and let's go back to the investment property, the fixed assets audit program. If you are wanting to put a hyperlink into any location within any working paper within Draftworx, you just need to first use the Office tools to import that working paper into Draftworx, and you can import Word documents, spreadsheets, PDFs, whatever you like. Let's put in a spreadsheet quickly. Once you select the type, it asks you yes to open an existing file or no to create a new file. Let's go and open an existing one, and I have one on my desktop somewhere. Oh no, it was on my other desktop. It's probably a very long document. Okay, so here we have a working paper that we've now imported into Draftworx. I go to Save As. I specify a section reference, so let's call this 30.40, and it is the fixed asset register. And once I've specified the name, give it a section reference, all I have to now do is say where I want to save it. Let's put it under audit programs. That's probably the best place to save most of your working papers. I click on audit programs, and it's now going to update the name for me. It's now called 30.40 in my window. Okay, and now if I have a look under my audit programs section 30, there is my fixed asset register. So that file is now part of my audit file as a whole for this client. Okay, I would then in this document go and specify that there is a fixed asset register. Yes, it is applicable to the component, and then I've got a hyperlinks tab, which I then go and hit the drop down under section 30, because that's where I want to go and find the file, just giving everybody's computers a chance to catch up with where I am. And you would then simply go and click on 30.40 to go and insert a hyperlink to 30.40. Okay, because this file is now part of the entire audit file, when you're copying files across, when you move it from server to local, it doesn't matter, this file will go with it, and therefore the hyperlink reference remains the same. So there it inserts the hyperlink for you automatically, and at any point you can click the hyperlink and it'll then open up that working paper for you. Okay. Now, if you recall, when we did under our audit programs document 10.20, I mentioned at the time that where you had a component that had an immaterial balance, such as your investment income, say 16 Rand, you have the option to go and say, no, we're not going to audit this component. It's not an applicable component for my audit. URBA, as we mentioned then, have come back and said, well, if you do that, please make sure that you insert that value on your overs and unders. Okay, so that's just going to go and cover you in case that balance is 100% overstated. So you say there's 16 Rand investment income, but there's actually zero. It's a potential audit difference. However, from a completeness point of view, and we mentioned at the time, investment income of 16 Rand, yeah, not material, I'm not going to audit, but what if it had to be 16 million Rand because they have not gone and recognized dividends that they've received? Okay, so there's an attempt to defraud the company. They keep the dividends for themselves. Okay, what you would need to do in that case, and that is why we have this overall completeness working paper. The overall completeness working paper literally just goes through what you've documented in 10.20 and lists all the components that you've either said, no, we're not auditing, or that you've left blank. So you'll see that there are additional class of transaction items here that maybe have absolutely nothing to do with your audit. We're just making sure that every other component that is possible is brought through. Okay, and now we give you the option to say, do I want to include a completeness test on each of these components? Investment income, in this case, I would definitely say yes, because we had 16 Rand, but something like other income, maybe, even if it was zero, we want to go and consider. Intangible assets, we can say is no, and the amortization, because we don't have them. Fair value adjustments, PPE, finance costs, maybe there was a bit of bank charges and they've allocated it to interest income, or even interest on overdraft. Tax expense, oh gosh, we should probably have audited that, but if you did get here, just go and make sure that there's not a tax exposure, and therefore you should have had a tax expense that maybe you don't have. There are no biological assets, so I can ignore those items, all of these items. So you're just going through basically and confirming whether or not there are any sections that you need to go and maybe do a procedure on completeness. Provisions maybe is a nice one. Are there provisions that should have been made? Finance leases, no. I'm just going to say no to all the others. Once you've gone through these items, the other question that it is asking you to confirm is, how much assurance do I want to get over the completeness of investment income? We could have auto-populated, but we felt it was maybe a little bit dangerous to auto-populate that. So we're just wanting you to go and say how much assurance. More than likely you can say low, unless there are reasons for you to believe that this particular client or the particular balance has got a higher risk. Maybe we go and look at tax expense and we're going to rather say, listen, I want a higher assurance on the tax expense. If you leave it blank, we're going to assume significant. That's the only thing when you get to the next sheet that we're going to stipulate. So now I've decided what I want to audit for completeness. And I go to my 70.20, which is the next sheet. And this now gives me the opportunity for each of these components to go and describe the procedure that I will perform in order to verify the completeness of this balance. Investment income, go and verify investment statements. Or if you've got investments in the entity, go and look at press releases for the investments and find out whether any dividends were declared for the year. If it's interest income, go and have a look at your bank confirmation, if your bank actually puts the interest on, which I know sometimes is a bit of a challenge. Or it could even be just getting the IT3B. If you've got a February year end, that's nice and easy. You can go and see if there's interest, or scrutinize the bank statements. So whatever the case is, go and document a procedure to confirm completeness of the investment income. Because what we're saying is the 16 Rand, even if it's 100% overstated, it's not material. 16 Rand or zero, that's not a problem. We just want to cover ourselves that maybe the business has deliberately or accidentally gone and not recorded specific items. Finance costs, again, have a look at your bank confirmation. Other incomes, maybe scrutinize the bank statement for any unusual deposits that don't link directly to actual customers or your normal sales customers. Tax expense, reperform the tax calc of the client. So it's very unusual that you're going to have tax expense sitting here, because even if you have zero tax, I would say that that is qualitatively a material section that you would need to go and do the tax calc. But I'm hoping you're getting the background, or the idea here is that what we're trying to do is just give you the opportunity to cover yourself on completeness, so that if the query arises about could this balance have been materially misstated, then you have at least done a completeness test. You haven't had to go and do 10 or 15 procedures on investment income. You're doing one or two. We're just giving you the option of one or two procedures here. Go and put the reference in, so in other words, hyperlink to the working paper, any comments, and then we go and specify, do we consider the component complete? So it's a little bit of a conclusion. On the audit programs for each cycle, you also had a conclusion, so we're just wanting to put a little bit of a conclusion onto this audit program so that you know that you've covered the work that you needed to. Okay. Let's go and have a look at sampling. And to do the sampling, I have just got a different file that I've opened up. And you'll see under your audit programs there is a templates folder, and the one that I'm looking at is this one, the sampling, automated sampling template for pastel. Now the reason that there is a pastel one is because for many years I did sampling manually in Excel out of a pastel general ledger, so I know exactly what that layout of the file is, and we were able to develop a template that literally you could dump the general ledger from pastel into a spreadsheet, and we can go and do the sampling for you. However, the principles that I'm going to explain now are also consistent. If you have some other form of general ledger, there is an other template, you would just need to put the information from your general ledger source into the appropriate columns. It's very, very easy to do. Or if you don't want to use our automated sampling template and you're just wanting to determine a sample size, you can also follow the exact same steps to determine the sample size for yourself and then go about doing the sampling for yourself. So we're looking at the pastel one because I've got a nice pastel GL. And you would start on the guidance sheet, and action 1 actually sits on the guidance sheet, and what we're asking you to specify is what are you going to test with each item. What you would do generally is you open up the template, and as I save that external document to a new location, I'd use save as to go and save this as, let's say for instance, your expenses 52.20 expenses sample, or whatever the case might be. Go and put it under audit program so that you can make multiple copies of the sampling template as and when you need them. So for as many samples as you need, you'd create a new template. We would then go and confirm what components am I testing, and this is the great thing about what RAC is doing is I can actually select multiple. If I've got one procedure that addresses cost of sales and other expenses together, then I can do one sample for those items. Okay, so just go and specify the components and then flip over to the sample size calc sheet. And here you have the option of drop downs, literally as easy as that, to pull in various materialities. Now I did do a specific materiality in this case under total assets, so that's the materiality that I wanted to use. for this procedure. It's just, it allows me to get a nice sample size calculation for you as I'm going through this. The next step is to go and confirm what assertions are you covering with this procedure. It pulls in the level of risk for each item. Okay, so for each assertion. And this is just to help you match what's on the audit program to what you're actually doing. Please don't do completeness and occurrence in the same sample. They're not, you can't do one sample for both. So we're going to test occurrence, accuracy, classification of cost of sales and other expenses. Just another note as well on sampling, when you are doing completeness, please don't take your general ledger and try and do a sample for completeness. You have to get a source or a reciprocal population in order to test completeness. So if you want to test completeness of cost of sales, you need to find source documents, so delivery notes or orders or something of that nature. If you want to test the completeness of your creditors, you want to look at payments out of your bank statement after year end, not out of your GL, out of your bank statement. Go and look for a source document, not your general ledger, to test completeness. So please just be careful in sampling completeness, and please look out for directions of testing. It was something noted once again by Urba in their reviews that there's commonly a problem with testing completeness. While I'm on that, please let me add completeness of your fixed asset register, so completeness of your PPE. You can't test from your fixed asset register to test completeness. You need to physically walk around the premises and look for assets and go and trace them to the fixed asset register, or trace items in your repairs and maintenance and go and make sure whether these items should maybe not have been capitalized. Direction of testing, very, very important. Okay, so now I've selected my assertions. I now need to go and specify what level of assurance I'm going to need to perform this test at. We just do a little bit of a logic test. What's the highest from the ones you've said yes to? And that's a 2. But if your procedure says 1, then you only test it at 1. You don't go and do a level 2 procedure when only a level 1 is required on your audit program. Remembering that last week we went to great lengths to make sure that we were not over auditing stuff. If your audit program says 1, please don't double your sample size by selecting 2. Okay, so we're going to leave it as 2, and it then says please insert the detailed ledger into the pastel sheet. Now I've done that already, and I've inserted something like 7,000 rows of general ledger into this working paper. Okay, and I have literally just gone and value pasted, and you'll see from the layout that it is exactly as you get it out of Pastel. I have not edited anything. I've done everything from account number 2,000 to 4,000 odd and included a few balance sheets just to make a point when we get there. You can just literally go and dump. Where you have more than 10,000 rows of information, it will pop up a little warning to say that you must please contact us to go and increase the size of the spreadsheet. The bigger we make the spreadsheet, the larger the more space it takes up on your hard drive, obviously, and the slower that the working paper runs. So 10,000 we found was a good balance between size and functionality. But if you need more, we can, theoretically, we can extend it to 1 million, but that you're going to need a very good computer in order to sample from a GL that's 1 million. In that case, we'll rather help you manually in Excel to show you how to go about drawing that sample automatically. The first thing you should notice is that we're sitting with a #num error under my material items, and the reason that this is happening is because of the date format. So if you are seeing this, you'll see that we stipulate a date format above, and this date format that I've imported from Pastel is different from what's displayed above. So we're just wanting to make sure that we're getting the date in the right order. Is it day, day, month, month, year, year, or month, month, day, day, year, year? We just want to make sure where you got the source of the information from, that format can change. So just go and specify the correct layout of the date. There we go. It's day, day, month, month, year, year, and you'll see the material item error has gone away. Then there is a key item column, so if there are specific items you absolutely want to test, you can come back just now and select those items. And at the moment it's telling me that this line is not sampleable. The reason is I've not specified what GL accounts I want to test yet, so don't do anything further here. Just go and dump your entire GL, well, or at least a good chunk of your GL into this working paper. We can then go to the population check, and this is where I now go line by line through my general ledger in that population and what's on my actual trial balance to go and make sure that we are matching the values. So here it pulls in from my trial balance in Draftworx, what is the opening balance of this account? What is the closing balance? So that's just to differentiate in case there have been audit journals. Included in the sample, I'll come and choose what I want to include in a moment, but I want to point out that it's telling me that it does not match. The population balance and the trial balance are not matching. It does check against opening and closing, so depending on how you have used the opening balance column in Draftworx, if you have used it as literally the opening balance, so your income statement items are 0 and you've pulled in transactions, then closing is the correct. It will check, but it's telling me it's not matched. There's a difference between the two. Okay, so my population is not correct. It does not match my trial balance, therefore I need to go and fix my population. Or the client has posted journals after I got the TB or something. There's something not right. That's the whole point behind this check. What I also want to point out is if I scroll down, I do have a few balance sheet items that I've deliberately pulled in, like share capital. Share capital, it's telling me, is not matching. The reason is that this is an account balance. It's not transactions. Whereas on your population, your GL is just going to be transactions, what movements have occurred in the year. So balance sheet items will not match. Please, if you are sampling from balance sheet items, go back and confirm whether your population is complete and correct and that the movement is at least correct from year to year. Okay, I need to go and fix my population first because it's not matching. So I go back to my pastel sheet. I just deliberately deleted a cell here. If I go back to my population check, it's all in balance again. Now what do I actually want to test? And for this I use this column, and you'll see in a moment why I have this column coming in. I want to test my purchases, my transport, my plantation costs, but I don't want to test my inventory adjustments with this procedure. I don't want to sample from inventory adjustments because that I will test under my inventory section. So I leave those as no. So the point is I didn't have to go and copy and paste all of these accounts first and then delete these ones and then copy those ones so that I can pull it into the pastel population. You can skip items in the GL just by not saying yes to include in the sample. Okay, so I'm going to go back to direct costs. Wages I will not test with the sample. Other income I will not test. Interest, no testing. But accounting fees, bank charges, audit fees, bad debts, no. I'll rather test that elsewhere or separately. Cleaning, commission, all of this I can. Wait, depreciation I won't test. There's some marketing, rent, finance charges I won't test here. Forex expenses I'll rather test elsewhere. Insurance I'll test. So that's the process. Work through all of the items that are included in the population and decide what you are or are not going to test with your procedures. And then once you have done that, we can go back to the sample size calc sheet, and it has now pulled in the values for me of the total population. Okay, now the total population Rand value to be sampled, it tells me, is 108 million Rand. But it is also telling me that the population as per the lead sheet is 97 million Rand. So there's a slight difference between these two. In fact, not so slight, it's more than 10 million Rands difference. Now the reason that this is going to occur on your samples is because a general ledger consists of both debit and credit balances. Okay, and when I sample, I have to take an absolute value. So when I have a credit, I add it to the debits and I get a higher value for my population. So in the pastel GL, you will see that there is a question here about what items should be sampled. Should I sample debits? Should I sample credits? Or should I sample both? Most of the time, you will sample either debits or credits. Think of revenue, for instance. We want one set of procedures for sales and a different set of procedures for returns. So those will be two different samples. The only time I would use both is, for instance, if I want to draw a sample of debtors that includes some credit balance in my debtors accounts. But they're smaller amounts. I just want to give them the opportunity of being sampled so that I can go and verify that the debtors balance is actually correct, irrespective of whether it's a debit or credit. So I'm going to go and select debit now. And if I go back again, and while I'm here, I want to just go and specify two key items that I want to test as well, because these ones look fishy to me. I want to go and select them in my sample, get the invoices, and trace the supporting documentation. If I go back to my sample size calc, you'll see that there is still a difference. I'm still sitting on 103 versus 97, and once again, that is because there are credit balances in between, which I've now excluded, which would reduce the debits by 5 odd million, 5.7 million. That's why there's a difference here still. So the 97 is what you're going to hyperlink to your lead sheet, but you're actually sampling a potential 103 million rands in transactions. And you would then need to do a sample for the credit items at a later stage to go and look at purchase returns, in this case because we're testing expenses. Okay. Total number of transactions that I'm able to sample from, 3,274 line items are in my population. How am I testing completeness? Because I have done this population check, I simply have to refer back to the population check sheet where I have verified that the total per account number in my GL I have reconciled to the trial balance. That is how I've tested that. I've actually got the complete population. It agrees to my trial balance. So I have a valid set of data in which to sample from. Then I scroll down a little bit further. Action 5, identify all transactions of the population that are equal to or above performance materiality. Now I said my performance materiality was 900,000. How many items? 2. And their value is 1.8 million. Automatically populated for me. Were you not using the automated sampling, you'd have to go and manually insert these values. So just do be aware of that. If you are wanting to do a manual sample, you have to then go and identify the items above performance materiality. Key items, I selected those 2 key items. There are the 2 transactions and there is their balance. What is left is 101 million rands, 3,270 transactions, and I need to now just go and specify a random decimal number. There is an explanation in the little guidance that pops up. As long as it's 0.5, I'm going to highlight it red because then you haven't changed it. If it's not 0.5, then it'll no longer be red. So we want you to go and generate a random number. Please don't go and say is equal to 0.11111 or something that's clearly not random. Use the Excel random number generator. I'm going to say equals rand, and you open and close the brackets. Let me just see if I can increase that for you on the video. Oh, sorry, on your feed. Okay. That is what the random formula looks like. Press enter and it's going to give me a value, and then I just go and right click on it and I select copy and I right click again, paste special this time. Okay, and the reason I'm doing a paste special is I want to paste the value. I don't want it to update the random number each time I type something in Draftworx, otherwise my sample changes all the time. So you do need to then go and value paste that random number. Okay, let's go back to normal view. Okay. Then there is a question here about how I'm going to determine the sample size. Like the journal entries, we do give you the option of saying that it is a percentage of the population is going to be my sample size. It's not our preferred method. We prefer using a sample size generated based on the performance materiality figure. And at this point I want to point out the calculation that we do is identical to the one as given in the IFAC guide for the application of audit standards in small and medium engagements. So we are following a compliant approach. Okay, so I'm going to leave it as based on performance materiality. And then there are two very important questions that get asked. Firstly, has the entity had an audit qualification in the last 5 years? And the second one, is the overall control environment effective in the entity? Now the reason that we're asking these two questions is just to start giving you the option to say that generally things are okay here, okay? So there haven't been audit qualifications in 5 years, and there is a generally overall good control environment, and that you would know from documenting 12.40, your entity level controls working paper. When you have documented these two items as no and yes respectively, we then go and insert a suggested maximum sample size further below. Okay, there is my suggested maximum sample size. The next question before we get to the sample size is also about the PAS of the entity. If you're not getting a value here, then you need to go and insert it in the 10.00.02. Based on the PAS score of the entity, and based on the level of assurance that is required for this procedure, we alter the suggested maximum size accordingly. And that has been IRBA's big question when looking at sampling, is they want to know for a fact that if risk increases, your sample size will increase. We brought them the table, we showed IRBA our sampling methodology, we showed them the table that calculated the suggested maximum sample size, and their only comment to us was, why is it so high? Okay, so then we reduced it by about 30 to 40%, and now we have a suggested maximum sample size. But what we're saying is the suggested maximum only, as I said, comes in when we don't have audit qualifications and when we have an overall good control environment, just so that we know we're not inappropriately applying this maximum. Now, next table just calculates the risk of significant exception is from our level of assurance we've selected. So we go and select an R factor, a risk factor. So that just expands the sample size as your risk factor increases. And we've gone and calculated a sample size of 179.74. In fact, it would be rounded up to 180 were you to use that as a sample size. Now, this is slightly higher than would be the norm for a sample size, and the reason is I've selected a very low materiality because, as I said, I wanted to have some material items. This would usually be about a quarter of it. In fact, 20%, it would be only 20% of this value, because our actual performance materiality for this client was 4.5 million. And I've reduced it to 900. So that's greatly increased the suggested sample size. But now I have a maximum, and I can go and stipulate what my final sample size is. We do not say your sample size is 40, nor do we say your sample size is 180. We are allowing you to go and select that sample yourself. You cannot select 39. An error will come up, because 39 is less than the maximum, the suggested maximum. Okay, and I can choose any number greater, that's fine. Let's say, for instance, for whatever reason you decide on 45. The next cell, very, very important, please document your reasoning behind your sample size. It could be that you're comfortable that it is a relatively low risk client and that the sample size of 40 will give us sufficient assurance. but please document that the cell is yellow in order to enforce. Okay. All right. Action 8 is there for just those where you are looking at occurrence and completeness. We haven't really used action 8 where we put both on one sample size, but what you can just do maybe here, if you've got one sample like this for the existence or occurrence and a separate sample for completeness, just go and reference this back to that working paper so that there is a link between the two, just in case you do want to create that link. But now we have our sample size of 45. We go into the next sheet, and you can now go and specify your procedures for each of those assertions. Once again, the assertions that we selected in the previous sheet would be based on what was populated in our audit program, and once again, as with the journals, the actual steps that we perform are going to be in accordance with what is on our audit program. So we would just go and document appropriately. And I just want you to see, as I type, it's automatically putting in my ABC. And all right, so that's the 5 things that I want to do. And I then go to my sample testing sheet. What we've now done, if I scroll a little bit to the right, you'll see there is my ABC. So that's why we put the ABC in the procedure detail. You don't want to have to write the whole procedure in here. It's going to take up a lot of space. So we just put an ABCD in for you automatically, and here are my material items, and it's automatically pulled those material items out of the pastel population for me. Here are my key items that I selected. Scroll a little bit further down and it has gone and automatically selected for me all of my additional 45 transactions, pulled in their values. Okay. There is space, these 3 green cells, just to go and add any additional information. The invoice number, creditor's name, and then I need to document whether my procedures have been achieved, and it's simply a drop down, and I can go and tick each item. Okay, please be careful with a cross because that means there's a problem and you're going to need to do something about it, but you might have to make a note. So there are 1 to 20 as note numbers included as well. So I'm going to select note 1 there, and if I scroll to the bottom of my working paper, there is also a legend available, and it's also got the exact same drop down. Going to select 1, and you can then go and document what that means. So what is the information related to that note in each case. Okay. Further steps to that, you are also able to specify any RAND value errors that you pick up. Okay. The point, and in sampling, you need to go and if you find an error, you need to go and document that error, and you need to consider extrapolation where appropriate. So let's say, for instance, we found 1,000 Rand error on this item, okay, and if it was overstated by 1,000, let's say 1,000, if it was overstated, I'd need to credit it, so I'd put a negative. So this is the positive or negative, so the credit to primary component needs to be a negative there. So if you are looking at what value needs to go in, just be careful that this is a debit or credit leg to a transaction. Then we would also go and specify whether this is a systematic error or is it an isolated error. Okay. The difference is an isolated error you can prove just happened once, and therefore I don't need to extrapolate. But a systematic error is one that I will extrapolate. Okay. Is it a disagreement or limitation adjustment? The difference there is a disagreement is the client processed this transaction, debit X, credit Y, but I believe that the value should have been this, debit, credit. Then I know what the contra entry is. What's the contra error entry to that error? A limitation is where they have not provided me with supporting documentation, or there is no way to determine what the other leg of the entry is, then I have a limitation. So it's basically a one-legged journal on my overs and unders schedule. Okay, I'm going to go with disagreement in this case, and we now, because I was testing multiple components, I just need to specify, is this cost of sales or other expenses? And because it's disagreement, I need to go and specify what is the other leg that is impacted, and I'm going to go and select trade and other payables. Once I've done this to all my sampling items, any errors that I have found, I can open up my errors and extrapolation sheet, and it has gone and extrapolated all of those errors for me per component, and I can then transfer this to my overs and unders schedule. Okay. All right, a couple of questions are coming in, so I want to quickly address those. All right, so there's a question about the suggested maximum sample size. So the question was, the suggested maximum is 40. When I select 39, it gives me an error. Okay. The reason is the suggested maximum is the lowest I can go. It's not the highest I can go. It's a suggested maximum. You can do more, but it's saying my sample size is 180. But I can limit it to 40 if I wish. I can't take it to less than 40 because then I'm not testing enough. That's the theory behind it. So I'm allowed to select anything above 40. In fact, I can select 400 if I want to. This is just a suggested maximum that I may use, but it is the lower limit of that maximum, of what my sample size can be. So that's why I'm getting an error when I type in a 39 in that. It's too low. 39 is too low in that case. Okay. All right. In terms of what accounting systems, there's a couple of questions about accounting system supported. As I said, this is my pastel sampling template. Let me quickly go to my other file here, and I'm going to open up the substantive sampling template for other accounting systems. And we can, as long as you can get me information in the population, opening up the population sheet, which specifies the following information. What is the account number of the transaction? What is the date of the transaction? What is the detail? What is the reference? And then any other information you'd like to import, and the last column, the amount, with negatives being credits and positives being debits. Okay, that is you just need to convert whatever accounting system you're using, whatever your population is, just convert it into this layout. You can take it a step further. You can use this to sample from your fixed asset register. So account number would become your asset number. Date might be your purchase date. You could leave it blank. Detail, in other words, the detail, the name of the asset, what reference number it has, a serial number, any other information, and then the book value of that asset. And then we can go and draw a sample of fixed assets out of your fixed asset register. Your population check obviously will not work because those account numbers are not in your trial balance. So in that case, I would still go and specify which assets are included in my sample, but I would need to do something else. In other words, I'd need to say, yes, this is the total book value as per my fixed asset register. If I want to sample from my debtors ledger, I can pull in my debtors account number. The date would be year end, the detail, the debtor's name, for instance, his reference number, whatever the case is, as long as I get amount into this column. So this template you could use for anything. You could use it for any type of GL, for any type of population, as long as you get it into this layout specifically. Okay. All right, then yes, the PIS score is not used in determining audit decisions in some jurisdictions. Obviously, PIS is a South African invention. In those cases, Sunday, the decision is around the size of the entity, small, medium, and large. I must admit I don't know what impact that is going to have if you just use the drop-down list to go and change it. I'll have to have a look at that one for you and come back to you in terms of how to document that and how to adjust it. Okay, all right. All right, then there's a question just to repeat the disagreement examples you can get. So when you are trying to determine what the differences are, let me just switch back to my sampling item. Where you do have errors, so disagreement adjustments, again, a disagreement adjustment is one where client has processed so much, but it should have been so much. There's an audit disagreement. I disagree with management about the amount. Well, he may come back and say, well, actually, yes, you're right. You need to process an adjustment. That's not the point. Is I disagree with what's on the general ledger, for instance, okay? Or I disagree with what has been processed. You put in your adjustment and you know exactly what the debit and credit legs need to be in order to correct that error. So that would be a disagreement adjustment. So the VAT was calculated incorrectly, or it was a typo and the incorrect amount was recorded in the general ledger, or the transaction didn't actually take place. The client returned the goods, but no returns note was ever issued. Those are disagreement adjustments where there's clearly an error between what is processed and what actually happened, and we can determine what the two legs of the entry are. Whereas limitation is, client, here is a transaction in your general ledger for 10,000 rands. You have purchased goods for 10,000 rands. Please provide me with a supporting document. Sorry, there is no supporting document. What alternative information do you have for me to verify that you spent this 10,000 rand? Sorry, there is no alternative verification. Well, how did you pay? Well, it was with a cash check. So the cash check doesn't stipulate who cashed the check, so you can't make sure that the transaction has happened. So in other words, there is no way for me to determine whether this transaction actually took place. Therefore, there is a limitation on me as an auditor in terms of identifying the validity of the transaction. Therefore, there's a limitation. I can only say it will debit, or sorry, in this case, because it's an expense, it's going to credit expenses because the expense does not exist. There is no proof that it exists, but I don't know what the other entry is. Is it trade and other payables? Is it bank? Maybe actually the client took the money for himself, so it needs to go to loan account. I don't know. I don't know what the contra entry is, so I put through a one-legged journal entry on my overs and unders and say there's a potential error here. Okay. Sorry, I'm just coming back again to the suggested maximum sample size. So the question just arose is I'm talking about suggested maximum sample size, but I can choose a higher amount. Should this suggested maximum sample size then not be the suggested minimum size? And I just want to indicate why this is definitely not a suggested minimum. As I said earlier, the population and everything that we had resulted in an exceptionally high sample size calculation. What I have done is I've gone back to my materialities and I've gone and adjusted my materiality down to or up to the 4.5, my performance materiality that I originally selected for this client. And what you'll immediately see is my sample size is now sitting at 36. Not at the 179. So this is more realistic sample size that you are likely to see when you are doing your sampling calculation. Sometimes you don't get anywhere near the maximum sample size. And if I also then go to my population check and I just want to go and switch off, let's say we were testing a much smaller section of my file. Just want to go and just going and putting a whole lot of additional no's, and I go back to my sample size calc. Okay, so now I'm sitting with a calculated sample size of 21.79 and a suggested max of 40. Now if that was a suggested minimum, then I would have to test 40 items. I'd have no choice. But because it is a suggested maximum sample size, I can select 22 and not 40. So that's why it sounds a bit odd to call it a suggested maximum. So because especially when you've got a very high sample selection, but what we're saying is that as your sample size increases as your population increases or your level of assurance decreases, we reach a point where we say we've gotten to 40 and we feel 40 is a maximum that you need for the sample size. You may choose more, but we suggest that this is the maximum that your sample size goes. You can't choose less than 40 if your calculated sample size is more than 40. But if you are sitting on 700 as your sample size calculation, you can choose 40. You can use that as your maximum sample size. So that's just, it's semantics, but we call it the suggested maximum because it is most certainly not a suggested minimum, because you can go to less than that item. Thanks very much. Have a fantastic day, have a fantastic weekend, and looking forward to spending time with you again next week. From our side, goodbye.
Thanks, guys. Just to echo what Leon said, all the best, take care, and we'll see you next week. Look forward to that. Yeah, thanks a lot. Cheerio.